Hey, what's going on, guys? Wanted to shoot a quick video. I came across this post on Reddit, and I kind of wanted to kind of look at it a little bit further here. So they're looking at all of the funds that have outperformed the S&P 500 year to date with dividends reinvested. So this is, obviously including the price return of the stock as well as the distributions, and they're assuming just a reinvestment into the fund. So let's go ahead and make this a little bit bigger here. And zoom out on this side. Okay, so looking at this breakdown here, you can see that NVDY year to date, the return plus the dividends reinvested is 114%. FBY is 32.71%, NFLY 43.78%, PY or PayPal 33.48%, and then the YMAG, which is the Magnificent 7, is 22.30. And then one of the biggest, actually the biggest fund year to date, Misty at 152, almost 153% year to date. And then SPY is sitting at 19.45%. So needless to say, there's several funds here that are outperforming SPY. However, there is someone brought up a good point in the post. What was it? It was he said sweet. Let me see if I can make this a little bit bigger for you guys. He said, sweet, now compare each to their underlying, which is a very great point, right? Obviously you're going to beat the market when your underlying returns 194%. Like this NVDY isn't going to compete, beat this, but it's going to be pretty close. Not all cases, obviously. MSTR has kind of gotten away from Yieldmax and their fund managers there. But for the most part, it's going to be close to the underlying. Obviously not financial advisor here, so do with that as you will. But so obviously, if you would have invested into the underlying, you would have greatly beat the market this year, right? Nvidia is up almost 200%, MSTR up 340%, and so on here. So are you going to be able to consistently do that year after year? Probably not. Obviously Nvidia the past 2 or 3 years has just been on a tear, but who knows how long it's going to last, right? So yes, you're going to outperform the market when the underlying is just having a phenomenal year. So just kind of understand that. But I did think it was kind of cool to kind of see this illustration. I think this is actually from totalreturns.com. I will pull it up here in a second and kind of go through that data just to kind of compare it. But really cool website. It calculates if you were to obviously reinvest your dividends, because a lot of these funds all these funds are income based. So a lot of the value from their funds is the distributions every month, and kind of what you do with that distribution once you get it. So let's look at some of these other comments here. He says, I love how everyone wants to be right and no one wants to just take in the information, see if it works for them. If it doesn't work for you, that's okay. That's a great point. The stock market has thousands of stocks. May not make sense for everybody. You don't have to get all the jargon about how it works. We know how it works, and we still choose to do it. Paying annualized 100% dividend. Yeah, they're at risk. Thanks, Captain Obvious. And thanks, OP, for sharing something of value. Right, absolutely. I think this is a great illustration, just to kind of get an understanding. Yeah, so looks like there's a lot of conversation going on this post. I'll leave this link down below so you guys can go check it out. But yeah, ultimately, in my opinion, if you're looking for 100% growth, investing into the underlying, makes more sense for most cases. Especially in the market we're in right now. We're in a bull market. Everything's just ripping to the upside. But who knows? If we go into a bear market, some of these income funds could potentially be better, or could perform better on a short-term basis, right? If it's just nosediving, you're at least selling some premium on the way down. So, just kind of understand that. But yeah, needless to say though, pretty interesting website here. I'm going to, yeah. So here it is now. That's called, yeah, I think it's called totalreturns.com, but you can, type in as many tickers as you want. You can select, so this is the only option currently, dividends reinvested. You can select the date, and then so on. So yeah, the S&P 500 year to date is up almost 20%. And then I was starting to look at some of these other ones. So like Tesla compared to the actual underline, it's lagging a little bit. NVIDIA, MISTI, MSTR, and so forth there. So really cool website though. Definitely go. I'll leave a link to this website as well down below. Yeah, it would have been awesome to invest into MSTR back in January. Even MSTY, you're sitting some pretty solid returns here. But, wow, NVIDIA or Tesla back in 2020 was up 732%. Completely forgot about that. That's incredible. Incredible. Okay. All right, guys, that is going to be it for today's video. I wanted to kind of just show you guys the two resources that I came across. I think these are very valuable. It's going to be able to allow people to quickly, obviously at the end of the day, it's about total return. Maybe not for everybody. If you're just a solely income investor, then that may not be something you're really looking at as far as the total return. But I think it's a good metric to evaluate, if these income funds make sense. Obviously, if their total return makes sense as well. So what is this? So this is inflation adjusted. Okay, so this is another metric over here as well. Okay. So you can just normalize that into dollars. Okay, cool. Cool. All right, guys, that's going to be it for today's video. Please like, subscribe down below.